a concise approach to top-down market strategies and the forces affecting investments. That's the spoken word on investing.
We're going to get the spoken word now on investing in uniforms, of all things, from our Chief Equity Strategist, John Blank, who joins us via Skype from Los Angeles. So the uniform industry is a relatively small industry, John, but why are they topping the charts here in this new year?
Terry, they're making money hand over fist, and they've been doing it for 3 or 4 years. The reason is a combination of influences that are deep inside this economy. One is it's a service economy, and North America is. And more we're seeing that the way C-level executives, CEOs, CFOs, CIOs are thinking is that, we need to update our uniforms, update our corporate identity. And they're looking at these programs and being offered, all-in programs at places like Synthetix and UniFirst and GK Uniforms, and these companies are old, but they're new with their offerings, and there's always a need to update those corporate identities. So as the jobs market gets hotter in the service economy particularly, what you can do for an investing play is buy a uniform company.
So is this making a statement about the job situation?
It is, Terry. It is a bullish element to the job situation and also a bearish element. It's a bullish element in the sense that there are more and more uniforms that are going into the U.S. economy and the Canadian economy, and that's the jobs we're adding. But the problem is, obviously, if you're wearing a uniform, you're working for somebody at probably an hourly job or a not very high-level paying job. So as we know, the wages are not keeping up with the job growth, and this is an example of a business that's profiting from uniforms, which is very, very mid-level to low-level type jobs, and other than, if you get your Geek Squad Best Buy type uniforms, other than that, this stuff is not delivering the wage growth. So it's a good side story, but it's not all feel good because these jobs don't have the wage growth. So
is this trend going to continue for a while?
I think so, Terry. I haven't seen estimate revisions as smooth and as stable as these industries and these companies are showing us. So clearly this is a very broad trend, a very emphatically stable trend, and I think people can bet on it and play in a long-term holdings context as well as a short-term holding context with these companies as an investment holding.
All right, Synthetix was one company that you mentioned.
That's correct, Synthetix. This is the big player. They're the Zacks ranked #1. This is a company, again, the only issue you have with a Synthetix is its price to sales ratio and its PEG ratios are getting up towards 2. Which means that people have bought this story, they know about it. So you're going to have to wait on a Synthetix and look for a pullback. But if you get a pullback, Synthetix is a place you want to put some money to work.
Another company is GNK Services.
GNK Services, this one and a company called UniFirst, UNF, ticker UNF, are Canadian companies, and they are the big competitors to Synthetix. And the other competitor in this industry is Aramark. Even though they're a food service company, one of the 3 divisions is a uniform company. But GNK Uniforms is a smaller mid-cap stock. Again, same profile as Synthetix, growing earnings about 12% a year. And again, you're going to wait for a pullback in stocks to buy the company. And that's what I would do here with GNK. Just like Synthetix, look for that value when it comes about. And if you get a play going a little stronger towards GNK, buy it versus Synthetix.
All right, John, do you own any of those?
No, I do not.
All right, thanks a lot. There you have it, spoken word on uniforms, of all things. Who'd have thought? With our Chief Equity Strategist, John Blank. With John, I'm Terry Ruffalo.